Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, we're having a meeting, a board meeting with my daughters. They're the board of directors. It's a tax write-off, ladies and gentlemen. We're going to talk about it today. And welcome to Fossey Optics. Check. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And as you can see, we're on the Stop Struggling Now YouTube channel page. And I want to thank you for being here once again. And please share the videos to help other people. You'll notice we have the join button over here on the right-hand side. That's to become a member of the channel. And as a member of the channel, I give you special messages under the community tab and 1 or 2 videos per month, especially for members only. So once again, thank you for being here. And today we're going to be talking about an LLC, an S Corp, or corporation, board of directors, not getting your corporate veil pierced. This is important, ladies and gentlemen, because you've heard me harp on you about getting an LLC. A lot of people get an LLC, but then what do? You get a bank account, you get Dun & Bradstreet, you get an EIN number, you get an office potentially from Opus Virtual Office. But then what happens when you get sued, or if you get sued? Well, if you don't have a separate bank account, for instance, it has to be a separate entity. You can't treat it like it's your own piggy bank. So you have to be separate. So any money that you transfer out of your bank account to you or from you into your bank account needs to be recorded. So get your Excel spreadsheets if you do not have an accountant. And every transaction in and out of your bank account, you have to treat it as if your business is a separate person. All right? You just can't roll to the ATM machine. Well, as an LLC, you can roll to the ATM machine and pull out money. But I'm just saying, if you ever get in a lawsuit, they will bust your corporate veil and you will be liable. You will no longer be, you won't have protection. So here's how we have protection. It's a simple matter. All right, I'm going to show you. But before I get into this, there's a lot of startups. And what you may or may not know is if you started up last year, you can write off at least $5,000 for startup costs. Here we go. The IRS allows you to deduct $5,000 in business startups costs and $5,000 in organizational costs. That's right. So when you're filling out that paperwork, doing all kind of crazy stuff to start your business, getting inventory, this, that, and the other, you can write off $5,000. Organizational costs, when you pay like the state for filing fees or an attorney for filing fees, these can be written off as well, ladies and gentlemen. Part of your corporation. And if you don't think properly, a corporation is an LLC, is an S Corp, is a corporation. There's only differences based on if you're a corporation.inc. All right? Things change a little bit, but let's get into it. The corporate veil, we don't want that busted, so we got to have annual meetings. We got to have a board of directors meeting. If you have an LLC, it's a board of advisors meeting. If you have an S Corp or a corporation, then you call it a board of directors meeting. Got that? LLC, we have board of advisors. Who should be on your board of advisors? People that can help you with your business. You don't have to compensate them in reality. Okay? But we're going to talk about a few things here. I'm going to have a link down below for this Lexology page where they're talking about the 5 most common ways to pierce the corporate veil and impose personal liability for corporate debts. You might want to read this, ladies and gentlemen. Yes, it's from 4 years ago, but you might want to read it. So here we go. 1, the existence of fraud, wrongdoing, or injustice to third parties. Bust your corporate veil. 2, failure to maintain separate identities of the companies. That's what I was talking about. You got to make sure when you take a draw as an LLC, you write a check out to you as a draw. You record that down. Okay? If you want to write yourself a W-2, then you have to pay taxes on that. That may help you in the long run, but then you want an S Corp if you're going to do that. All right. But anyhow, that's a whole nother video. Number 3, failure to maintain separate identities of company and its owners and shareholders. This is what I was talking about. If you're running around with an LLC and your LLC has a bank account and you're running around with the debit card and you're going to the movies and you charge it for the movies and it has no business reason for it, then guess what? They're going to bust your corporate veil. All right? You run around, go to the clothing store, go buy clothes. Now, let's put it this way. If you're doing videos, you're doing some things that can be construed as this is a business expense for business attire. That is allowed. But I'm just saying you got to be careful on what you're doing. If you don't want your corporate veil to be busted, then no, you should be transferring money, take a draw, or transferring money out to you, record it, and then you go use your own debit card because you're a separate entity. All right? Number 4, failure to adequately capitalize the company, meaning when you open a bank account, you're sending money in there. All right? Now, it's got to be capitalized. And number 5, failure to follow corporate formalities. And that's what I'm talking about today. You got to have an annual meeting, ladies and gentlemen. And the annual meeting is a write-off. You've heard me talk about tax write-offs all day, every day. And when you have your own business, ordinary becomes a tax write-off. So I'll give you a perfect example. Yesterday, I had to hold a corporate meeting. Under my corporate structure, I am the CEO and I am also the only board of director. So I'm holding a corporate meeting because I want to add additional people as on the board of directors because we are an S Corp. If you're an LLC, then it would be board of advisors like I've mentioned before. So I'm adding my daughters. So this is why we are at Seasons 32, and that's where I'm holding the meeting. And while we're at Seasons 32, we're eating. We're talking business. We're writing it down, ladies and gentlemen, or we already have our meeting structured. I'll show you what that is shortly. It's already structured. I know what I'm going to talk about already. So you're going to roll in just like that. You're going to record that time, that day, when you started, what time of day or where your location is. After the meeting is over, your directors or your advisors who are present are going to sign it and date it. Now, somebody comes in and starts looking like, hey, is this can we get some money from these people because, they have a nice house over here. They have a nice apartment complex over there. We want to bust their corporate veil because we can sue them personally. This is what you need to do. You need to have an annual meeting. But I called mine a board meeting. They're two separate things. Nothing wrong with having a board meeting. There's nothing wrong with having a board meeting, an annual meeting at your corporate retreat, wherever that may be. And if your board members or board of advisors are family members, guess what, ladies and gentlemen? That Hawaii trip with your family members and you hold your board meeting in the hotel in your hotel room, that's a board meeting. You write it down, you record it. A large percentage of that, if not all of it, could be written off because travel could be written off. Anything you ordered or bought for the corporate meeting, annual meeting can be written off. Even if I just didn't want to have an annual meeting, I called it a board of directors meeting. Either way, we're writing it off. That's right, ladies and gentlemen. This is how the top 10%ers do you. While you're out here paying taxes, We're out here writing off everything we do pretty much. If I'm doing videos, think about something. You're doing videos, you're seen on camera. You go down to the hair salon or the barber shop. You get your hair and makeup done. That could be a write-off, ladies and gentlemen. You're going to have to start thinking outside of the box. You don't think these top 10 percenters don't pay taxes for no reason. They're in business. This is why they mess around with businesses. Plural. Because depending on what their businesses are, almost everything they do can be written off, partially written off, or they're minimized how much money they get to make, and their company is making the money. How much you're writing yourself a check for, that's a different story. But anyhow, I'm talking about corporate meetings, board of directors meetings, annual meetings. Here is an agenda, a template for you. I'll have a link down below because this is not rocket science, ladies and gentlemen. You just have to document everything. Because if anything ever happens, they'll say, okay, these guys are having annual meetings. These guys are actually having board of directors meetings. Is this legitimate? They're actually paying their annual dues for their LLC when it comes up for the state. They're not over here using the corporate piggy bank as their own private fund. Okay, they're a legitimate business. Here we go, the annual meeting. You see, this is nothing major. Everybody has their own different way of writing down the annual meeting, what you're going to talk about. As the CEO, you can write anything down here you want and anything you want to go over during a meeting. But this outline right here is good for everybody. All right? No matter if it's an LLC, an S Corp, or I'll call it a C Corp, which is a corporation, which is an Inc. All right? Does not matter. This works for everybody. You can amend it. You can change it however you want. Okay? I'll have a link, like I said, down below in the description. Here's the board of directors outline. I use a different one, but it's up to you what you want to talk about. You're the CEO. You have whatever you want to talk about, you put down. Okay? And then you get on with it. It's pretty simple, ladies and gentlemen. And some of you may still say, okay, Eric, I'll have a link down below for this one too. Some of you may say, well, I'm in a different state or my requirements for my state may be different. This is true. This is why you should always consult with somebody, attorneys, lawyers, or online. We have Rocket Lawyer. They'll have, if you pay a fee or even a trial, you can put in what type of document you're looking for, and they'll go with trying to program it for the state you're in. You can go through them. I'll have a link down below for Rocket Lawyer, or you can go to Law Depot. Same thing for all these agreements. You can pay a monthly fee, or you can go see a lawyer and pay them, or you can do it yourself. Either way, you need to have it done. Okay? So that's it, ladies and gentlemen. This is all about corporation, corporate veil, LLC, S Corp, C Corps. All right? This is how we do it, and this is how you get to do tax write-offs when you want to go out to have lunch, dinner, whatever with your family, and they're on the board of advisors or the board of directors. You can host a meeting, and things are going to be a taxable deduction event. Powerful. More money in your pocket, more wealth in your pocket for you to invest. And if you haven't seen my videos on the S Corp versus LLC, some of you are going to be paying too much in taxes this year if you don't get that S Corp and you've made over $40,000 in your LLC. You better get straight, because the taxes are killing you and taking away your wealth. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why I'm trying to get you on that corporate level. Because as soon as you have an LLC and realize that you can get tax write-offs every time you're spending money, if you direct it properly, you can sit there and use extra money to invest, because you're not going to have to pay that much money in taxes. So join me, ladies and gentlemen. And if you have any questions, you always know where to find me at Eric at StopStrugglingNow.com. And with all that said, keep your head up, keep moving, and I'm out.